Greetings from Kotak Mahindra Mutual Fund. At the outset, I would like to wish you a very healthy and wealthy 2022. Hope this year ends the misery of pandemic and we see normalcy soon. The Indian government has taken an initiative to boost the domestic manufacturing and exports. This has resulted in the manufacturing sector picking up pace over the last few years. We present to you Kotak Manufacture in India Fund, an open-ended equity scheme following manufacturing theme which seeks to tap the opportunities provided by the domestic manufacturing businesses. India has emerged as back office to the world in form of providing software support. This has led to the total software exports surpass the gross oil import bill. Further, India has also been the pharmacy to the world by being the third largest manufacturer of pharmacy in terms of volume. Similarly, on the electronics front, the mobile manufacturing output has risen 8 times in 7 years. Production linked incentive or PLI schemes, as they are popularly known as, have resulted into improving trade balance for some of the sectors like electronic components, white goods, solar panel, medical devices and pharma. The manufacturing in India theme is on the cusp of a renaissance which has started to unfold, and this might be the story of coming decade for India. The manufacturing sector has seen significant improvement thanks to the new manufacturing firms that have come up in big way. Further, their share in the total manufacturing has increased considerably. We can expect the real manufacturing gross fixed capital formation GFCF to increase from 5.5% of GDP to 7% of GDP by financial year 27. In value terms, it is likely to double by financial year 27. Key investment themes are China Plus One opportunity, PLI schemes, deleveraged balance sheets of corporates, housing and reimagining India's carbon footprint. The first theme is China Plus One opportunity. Ex-Australian Prime Minister Tony Abbott once said, "Answer to almost every question about China is India." As we all know, China gave COVID to the world and India gave vaccines. True to our tradition of Vasudhaiva Kutumbakam, India has shared nearly 12 crore units of vaccines with almost 100 countries. Over the last few years, India has imposed several anti-dumping duties against China. Further, the Government of India has announced PLI benefits to boost manufacturing in India across various sectors. Indian rupee has become more competitive against Chinese yuan. PLI schemes offer incentives on incremental sales for products manufactured in India. As per estimates, it should contribute to around 0.3% of GDP for financial year 22. Going ahead, the scheme could attract investments of about rupees 1,50,000 crores over next 5 years. This can lead to an addition of 1.7% of GDP for financial year 27 and create 1 crore direct jobs and 3.4 crore indirect jobs. Many of those investments are already in the pipeline, and hence PLI schemes will become growth differentiators in the days to come. Companies are carrying cash which is at a 2-decade high. As a result, they have been deleveraging their balance sheets. The capacity utilization is nearing pre-COVID levels, and with demand picking up, we hope that the companies start making investments soon. Currently, we are having the best housing affordability ratio, which was last seen in financial year 2004. Further, with introduction of RERA, the interest of home buyers is protected adequately. As a result, we expect the share of real housing to increase to 8% of GDP by financial year 2027. We can expect real housing capex to rise from rupees 10 trillion to rupees 17 trillion by financial year 2027. The sectors related to housing, such as electrical products, wires, cables, building materials like paints, tiles, construction companies, consumer durables, and so on and so forth, are likely to benefit from the housing boom. Manufacturing activities directly and indirectly impact the environment. India has committed to alternate source of energy in form of massive investments across multiple sectors, from renewable energy to improvement in energy efficiency. India's incremental capex is focused around the decarbonizing activities across sectors. Kotak Manufacture in India Fund will look to invest in a diversified portfolio of companies based on the themes that are likely to ride manufacturing wave. We look forward to your participation in Kotak Manufacture in India Fund. The NFO opens on 1st February 2022 and closes on 15 February 2022. You can invest either through lump sum or SIP in this fund. Nifty India Manufacturing Index, which is the benchmark of the fund, has outperformed the Nifty 500 index over 5 to 10 years in the past. The benchmark index has underperformed Nifty 500 index in the near term, thereby providing an opportunity to enter at these levels. The risk to the theme could be from COVID continuing to impact the economy and the business sentiments, high commodity prices, and inflation increasing the cost of capital, and so on. Discipline of asset allocation and patience of long-term investments are critical for investors to manage the risk.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.